Hello, good morning. Good morning, friends, colleagues, and all who joined our webinar today. And thank you for your time. And I know this is most productive part of the day, so we will try to be brief and concise today. And I'm happy to really to welcome and introduce our panel discussion participants this morning. And let me shortly run through who we have today and give a brief introduction. So I will start with Piotr Noceń. Piotr, just if you can wave your hand so everyone recognize you. Piotr is a co-founder and managing partner of Resource Partners. And Resource Partners is an active fund manager investing in Central Eastern European markets as well as Baltics. So welcome, Piotr. We also have today Arvydas Bložė. Arvydas is an investment director at Practica Capital, and you know Practica Capital, an active investor in Baltic markets and predominantly supporting young and developing growth companies. And also today we have Henri Mrejen. Henri is heading the direct investment activities and 7 industries. And 7 Industries is a single family office owned by Israeli entrepreneurs, and 7 Industries invest as a very long-term supportive minority partner in family or entrepreneur-led innovative technology companies. And today we have also a renowned investment banker in Lithuania, Šarūnas, who is a partner at Superia Corporate Finance. Hello, good morning, Šarūnas. Please wave your hand so everybody recognizes you. And we have a team of lawyers as well. So myself, I'm Irmantas Norkus, a managing partner at Vilnius office of Cobalt. We have Elijus Burgis, our head of corporate transactions, and we have Juozas Rimas, our head of M&A practice group. So this is our team, and topic today is, as announced, that this innovative technology and manufacturing targets in Lithuania. So industrial and manufacturing targets in Lithuania. So before we kick off or start our discussion, let me give a very brief view of what is happening globally in Europe and in our countries in the M&A market. So it will be basically 2-3 slides, and then we will start our discussion. Just you probably all are perfectly aware that this year is supposed to be a record year in M&A markets. And you see on the screen the global figures for 3 quarters 2021, and you also see a sharp increase in this year in terms of value of transactions as well as number of deals. And what are the drivers behind that robust growth? So those are 2 main drivers, and all experts agree that businesses or investors now are looking beyond COVID, and they count that COVID is over. Although with new variants coming up, and Omicron is really now starting to show its strength, this assumption may be somewhat misinterpreted, but anyway, investors are counting that COVID will really be fought by next year or a year after. And then the other driver is, of course, over liquidity and cash that companies are now having on their balance sheet, and as well as private sponsors. So it's not only private equity or financial investors that are fighting for and competing for M&A targets, but also corporates and shareholders. They are not expecting dividend payouts, but rather acquisitions from their investee companies. So that adds also a competition for M&A targets and increases deal making pace in the world. Cheap debt financing as well. So we have also a big surge in private equity over past few years, and each year we have 10% increase in capital allocated. So we see that private capital industry is really now at record highs and is prepared to invest. What is happening in Europe? Very much the same trend. And we have number of deals surging, although value a bit decreasing, but that's again, that's I would say short stop before further growth. What are the sectors that attract most of those investments in Europe? And no surprise, technology, media, telecoms is the most active and hot sector nowadays in Europe. What we have in Baltics, very much the same trend. So you see Lithuania, Latvia, and Estonia. That's the third quarter 21. The numbers are increasing. So this is a very short, how to say, definition of what is happening in the world, and no surprise that we have extremely active markets, and we see that the Baltics are producing more and more deals, and just recently we heard another good deal, Deadbridge acquired by Cognizant, and the deal value exceeding 100 million. So we had those large deals in Lithuania. We had mega deals in the region, and Walt is really a groundbreaking transaction nearby in our neighborhood. So we expect this to continue. But now it's your word, and I'm turning to Juozas. Maybe you could continue, and please, Juozas, just engage our speakers.
Thank you, Irmantas, for the introductory remarks. I will give a brief overview of the Baltic technology ecosystem to give some background behind our further discussion with the panel members. And we'll have some comments on some recent M&A deals in that field, focusing on the companies developing solutions where at least some degree of engineering innovation is involved. However, it is often impossible to exclude developers of innovative software-based products from the picture. So I will mention some examples of those two in my brief overview. And there's no definite classification of technology sectors in the Baltics. However, I will use the classification by dealroom.co, a provider of data on startups in Europe, a very valuable data provider. I have modified it to some extent, but it will give a good outlook of how the technology sector looks like in the Baltics. So first, the energy sector, the energy industry, where we see right away that the target, which received a sizable Series A investment of around 20 million euros in Lithuania this year, is the solar software provider, EventTech. So it reflects perfectly the overall trend of increasing number and value of green energy investments. And in the energy efficiency sub-industry, a good example is Grow Glass, Latvian manufacturer of anti-reflective coatings. They have received an investment of over 50 million euros. A couple of years ago it was, but still it reflects the potential of Lithuanian innovative industries. In the energy storage, the hottest name now in the Baltics is Skeleton Technologies. It's a manufacturer of advanced battery solutions. They completed almost 30 billion euros Series D round this year, and now they are valued at over 200 million euros and expected to be a unicorn in several years. This is an Estonian addition to the market. And in general, the whole category is well illustrated by certain investments made by Contrarian Ventures and Ignitis Innovation Fund in Lithuania, Estonia, and beyond. So as an example, Ignitis Fund has made over 8 million euros investments already, despite its very narrow investment strategy. I will mention the fintech sector very briefly. It's a very well-developed sector in the Baltics, but just to note Verif, which is an Estonian AI-powered identity verification software developer. And they had an almost 60 million euro Series D round this year. It's the third largest investment in the Baltics this year. So again, as I mentioned, the technology sector is very mixed up. You cannot separate industrial innovation from IT innovation. They're all very often combined in one startup or an established market player. Lithuania is a clear leader in the Baltics in the life sciences industry. And we can see two sectors here, MedTech and artificial intelligence based solutions. So in MedTech, Brolis sensor technology is a good example. They had a 15 million euro funding round this year for their blood testing solution, non-invasive solution. And as to artificial intelligence based diagnostic solutions, we can mention Lithuanian startups Oxipit and Softneta. In the biotech sector, also Lithuania is leading the field, both in cell and gene therapy and in protein research, where we have very large established businesses such as Biotech Pharma, for instance, and also a number of startups. However, major deals in this field took place quite long ago. So the industry is now in the build-up phase. Now, regarding transportation, innovative technology in transportation sector. So except for the well-known Bolt investment rounds, there is no major deal activity as of now. But just to note that this sector includes a wide range of existing and developing companies, including navigation solution providers, GPS tracking devices, etc. Another area of innovation and technology is marketing technology. And this I would like to mention just for the second largest tech deal in the Baltics this year. Printful is a Latvian print-on-demand service provider. They received over 100 million euro in growth equity this year, resulting in a $1 billion valuation. So again, a completely new name on the market. And there are a number of other areas. I will not get into those. Indeed, the field is very various. Some are just not yet developed in the Baltics. Some are, on the other hand, receiving huge venture capital investment rounds, such as Interactio, which is an audio translation solution, almost 30 million euros, largest Series A in Lithuania this year. And as to the concluding slide about other fields of innovative technology, there are several fields such as smart electronic devices, telemetry, Internet of Things, and robotics, semiconductors, and photonics. I would say these fields are still more developed in Lithuania, especially laser industry. And we have the honor to have guests in our panel who will be able to tell us more about their investments into light conversion and deeper. Two prominent deals of this year in Lithuania, so respectively in the field of laser industry and smart electronic devices. So after this brief introduction, providing background behind this technology ecosystem in the Baltics, let me turn to our first guest, Henri Mrejen, who is heading business development at 7 Industries. Henri, can you tell us first a bit about the history of how the family office of 7 Industries came to be? I know it's a remarkable story of innovation and family business. Just for our audience, who, in view of 7 Industries being a new investor in our country.
Sure. Hi, everybody. Nice to meet you all and to see you all. My name is Henri. I'm heading for the past 14 years the investment activities of 7 Industries. 7 Industries actually is owned by Miss Ruti Wertheimer. She's second generation. We're based in Israel, and we invest all over the world. And 7 Industries is actually Miss Wertheimer parents created in the beginning of the 50s a very small company in Israel in the area of metal cutting tools, which was extremely innovative and became the number 2 in the world in their area. And in 2006, the family decided basically to sell their business to Warren Buffett. To Berkshire Hathaway for a quite large sum of money. And Ms. Wertheimer, who has always been very interested in both innovation and technology on one hand, and on the other hand, in the area of, I would say, entrepreneurs and family-owned companies, have decided to invest herself as a long-term, very supportive minority partner to entrepreneurs and to actually, I would say, both young companies and mid-sized companies in the specific areas of industrial, medical technologies, everything that is related to innovation. And today we have about 13 investments, mainly in Europe. We are very long-term. I think that's probably the main differentiator that we have versus others. And we're always like supportive minority to entrepreneurs.
Apologies.
Yeah.
Knowing that you have invested around the world, can you compare Lithuania and the Baltics that you already know from your investment into light conversion, compare it to other 2 regions that would be interesting to compare with Western Europe, where you have investments, and to Israel, which is known for many as a model venture capital and innovation country. How do we compare? So from your experience of making.
So maybe I'll tell first how we got to Lithuania and how we basically got driven to our investment in light conversion, where we invested about 25% in the company last June, and we're very happy to have discovered light conversion in Lithuania. We're basically looking at macro trend and technologies and looking at what are the strong clusters of technology, poles of excellence in the world. So one area that is very important to us and which we believe in very strongly is the area of lasers and photonics. And through basically our analysis that we've done outside in looking at what are the major clusters in the world and what are the excellent companies in those areas, we have come to know about light conversion. We've heard about them, we've looked at their products, we're talking to customers. So we understood basically that technology was very, very strong and products were very robust. And we basically approach light conversion with our unique, I would say, investment philosophy of being very long-term and helping company to grow and remaining independent, I would say, and not being acquired, because oftentimes those smaller companies, they are either tempted or they're under the hunting of the larger companies which are looking at them. So what we're offering here is really being a very long-term supportive partner to support the growth. So what we found out in Lithuania is basically this pole of excellence in laser and an excellent company. So those are basically the two things that we look at. And I'd say the third thing that was very important to us in terms of ecosystem in Lithuania was the fact that, you know, beyond that light conversion was relying on knowledge that was developed at the university, at people and talent that basically were coming from Vilnius University, entrepreneurs, basically in the name of Mr. Piskarkas and particular and Romas that were basically that had this entrepreneurial spirit to build a company like conversion. And I would say I would add so the entrepreneurial spirit and the talent I think was in the laser industry was complemented by something else, which I think is critical for the development of the tech ecosystem in Lithuania, is the excellence in software. I think this is key because even when we're talking about lasers, at the end of the day today, even in hardware, we're talking about a lot of software, a lot of software development. And the excellence in software development is a key enabler to other basically developments or to the developments of many of the companies, of the young companies that you've mentioned. And if I compare that to Israel, to bring that to the comparison, you know, in Israel at the beginning, you know, I would say that the high-tech industry really started at the beginning of the 90s with a lot of investments jump-started by the government and bringing VCs from all over the world and helping them basically mitigate their risk in Israel. But based on a lot of knowledge, I would say both in software on one hand and in semiconductors on the other hand. Those were basically the strength of Israel. So if you look for the past, I would say up until 10, 15 years ago, all the investments were in the software industry and in all the high-tech companies in Israel, software, but really related to software and resource development and semiconductors. But what happened after that is basically, I think that there is a convergence of the capabilities in the Israeli market and the talent and the development of the market. There is kind of, we are past an inflection point where the need for software and the need for semiconductors, which are enablers of all the high technologies behind them, is globally taking a larger share. So convergence of meeting the technology and the abilities that technology gives with basically the needs of the market. So if I compare basically Lithuania, obviously Lithuania today is still, you know, much smaller, and I think Israel is probably has some advance in terms of time of the development of the ecosystem. I'd say we found the same spirit of what we call in Israel a bit the chutzpah, the ability to question the status quo, and that we like. I think that brings basically the innovation power to the companies. I think people are working very hard and are entrepreneurs. At the end of the day, we like the spirit that we found out. It would be difficult at this stage for me to make like a real comparison of the clusters. And I say, you know, Israel today has about 6,000 startups, 100 unicorns. So just the last year, I mean, in 2021, we're talking about capital raising that doubled versus 2020, and we're talking about $20 billion of investments of capital raised in Israel last year. And I think what is really important is to see that now it's not only in one area, but it's really spanning across multiple areas.
Henri, thanks for your very interesting comparison and stating that the spirit is similar in Israel and Lithuania. Very, very nice to hear. and for the interesting link between with software and hardware, which I completely agree, and I've noticed myself that from looking at how the Baltic ecosystem looks like. But now, for time constraints, I would like to turn to my colleague Elijus Burgis to continue the discussion with other guests.
Thank you.
Yes, thank you, Juozas. And let me start with Šarūnas right away, shooting the hard question. So Šarūnas, you're working in as an investment banker, you're working in different sectors, overseeing the investments. Would you say the innovative technology or the tech sector is really happening, or is it rather buzzword for today yet in Lithuania?
Thank you. It's actually a very simple question, and very easy to answer. There was a time when you say technology, you would mean a vertical. Right now, technology is becoming horizontal, meaning it permeates every sector, and every sector becomes either tech enabled or very, very tech dependent on delivery of their products and services, on development of the products and services, and on their day-to-day operations. So I would say yes, of course. The technology, both the vertical, which we know in the traditional sense, technology people doing technology things in a company, is very much a theme, and we already, I mean, it's pretty obvious from the last, I would say, 2 to 3 years, what sort of deals get done in the Baltics and in Lithuania in particular.
So which deals would you call as most important or most interesting deals in that sector?
Okay, I'm a deals banker, so obviously people expect me to talk about deals, but deals are just one of the final stops in a somewhat longer journey of a company. And I think what is more important for tech deals is that the ecosystem produces enough companies for there to be deals with. And I think that's where I am the most hopeful. I think the ecosystem is working fantastically. It's working for the last 2 to 3 years. The VC funding, both from regional investors such as Arvydas is Practica, but also others, and also from Europe and the United States, is amazing. And the companies that were created, and some of them have been exited, is also, the list is growing and will continue to grow.
So talking about the future, do you think Lithuania has the right drivers for developing the tech sector and also exiting?
Obviously, there's a million things that can be improved, and if you go sector by sector, and you just need to listen to, let's say, like sector leaders and sector associations in their discussions with the government, what can be improved, what can be done to make the creation and build up of these companies easier. And there's always problems, but I think what you have is fundamentally a rather business-friendly environment still, despite everything, and also a receptive population. I think as a whole, people born after 9/11 are open to innovation, are eager to learn. We always joke about these millennials that they're this and that, but fundamentally I think they are much more independent-minded than we were when we were 20-somethings, and also they question authority, and they have what Henri has said in Hebrew, or was it Yiddish? I don't know, chutzpah, and they will do great things, and they are doing great things already.
So So you turned into talent pool. My next question, in fact, do we have then the talent pool to develop this sector, and maybe we can also integrate people from Belarus, Ukraine, or is it more of a reverse trend that we're talking about in this area? Because we see certain examples that companies being moved to other jurisdictions once they develop to a certain stage.
Okay, I don't shy away from controversy. So I will say maybe some controversial things for some people, but I think we should stop training so many lawyers and business graduates. For example, very relevant to the light conversion case, University of Vilnius has maybe 50 master's students, 40 every year in the physics faculty. That's like half the amount, I think, that an ambitious country with tech ambitions should have. And it's a complex problem. You know, it's not that physics faculty is gatekeeping and not letting more than 40 or 50 people to join it for master's studies. No, people just don't choose it in such a large amount. So a lot needs to be done in you know, discouraging people from you know, yet another worthless business administration BA, and it is worthless. Sorry, Dad. But choose to apply themselves and really learn something real, which is quantum electronics.
Yes, well, what would you do without lawyers? I wonder, but
I don't know. Have shorter negotiations? Kidding. We need lawyers. We need more lawyers as well. Yes, thank you.
So my last question on this, and related in a way to your comments on the state support, is it really needed for the tech sector to develop further, or should it do it on its own?
You know, support does not equal support. I wholeheartedly support government initiatives to really invest more into fundamental science, which does not immediately yield results, but creates an intellectual basis for the emergence of tech-enabled, market-tested, valuable businesses. You cannot have an ecosystem of, you know, things created by smart people without having smart people trained and being able to do scientific work in an academic environment. I think that is, from an ecosystem design perspective, an impossibility. So in that sense, government support is essential. I think government and EIF and DBRD and other multinational support has been essential, but is becoming less so, although still important in the development of the VC industry. And I'm guessing Arvydas will not disagree with me. Otherwise, it's you know, little things and little betterments that can be done in the area of improving corporate law, you know, stock options, and these sort of more mundane day-to-day things that I'm sure the VC association and lawyers already have told the Ministry of Economy 1,000,001 time to do.
So the good news that stock options are now the best system that we have in Europe.
But what you also need is different classes of shares, maybe a different governance regime vis-a-vis the CEO, yada 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 yada. Because if you look at the incorporation places of companies, it's I mean, being incorporated in Lithuania is an exception, a very big exception.
Okay, thank you very much, Šarūnas, and let me turn to Piotr of Resource Partners. And Resource Partners is one of the good examples that invested into Lithuania with the recent acquisition of Deeper. And Resource Partners obviously sees certain benefits in that investment, and hopefully a good trend is coming out of that. So Piotr, Resource Partners are generally known for consumer products and services. This is enshrined in the constitution of Resource Partners as the way I see it. But Deeper is not exactly the target of that kind. Is it then changing your investment strategy, or will you be looking into more tech investments also in the future?
Thank you, Elijus. It is completely opposite to what you said. So we investment in Deeper is exactly in the core of our strategy, and we perceive Deeper as an excellent example of the successful consumer-focused business group that grew up in Central and Eastern Europe. As you rightly said, we are probably the only non-tech industry-focused firm within private equity industry in the region, and that allows us to have a unique capabilities in anticipating and following the consumer megatrends and consumer behavior changes. And Deeper has all the factors that we are searching for. So digitalization of the business model that we see across our entire portfolio in different sectors, constant product innovation and novelty, very short time to market, and the customization of the product. And from that perspective, my first association with Deeper is not that it's a tech company. It's a consumer-focused company, very strong in outdoor activities well-being, which is also one of the themes that we follow. But most importantly, it has digital distribution and delivery in that. And I think also pointing out to what Šarūnas said and the use of technology, I think I wrote here one sentence that I would like to share with you. For us, technology is not a goal for the company. For us, technology is a tool to achieve the success. And from that perspective, Deeper is excellent example of what we have been doing, what we are doing, and what we will be doing as Resource Partners.
Thank you. So my comment, sorry, just to comment. My hope of calling Deeper a high-tech company was squashed just a minute ago, but thank you very much for your answer. So Juozas, turning to you.
Yeah. So Piotr, I would like to ask, drawing on your experience in investments in different European countries or Central Eastern European countries, how, as you explore the markets considerably, I guess, how does Lithuania or the Baltics, if you can comment on that, compare in the field of this similar businesses where you pointed out that technology supports the successful business model, but still has some innovation angle to that, innovative technology angle. So how do we compare to Poland or other countries in our region?
Sure. First of all, I would not put all the three countries in the Baltics into the same basket. I think the differences, for example, between Estonia and Latvia, and differences between Poland and Romania, I would say, in terms of business culture, in terms of management styles, etc. So I think each country has different characteristics. But all three countries, and not only these countries, but also the entire Central European region has several things in common. And then the first thing is we are all part of EU. So that helps a lot in doing business because it makes logistics much more easy, and the delivery in 48 hours to Spain, for example, is not an issue anymore for any of the companies that are active here in the region. So, but the strengths of the Baltic states and including Lithuania are that they have very business-friendly environment. I think this is compared to other countries in the region. I think this is it's not ideal, but it's better than the other countries. Same for the economies of the West that could describe, these economies are that they are very innovative. They are very entrepreneurial, and also they have demonstrated that they can deliver the results in the past. Maybe this is because in general these are small countries compared, if you compare it with the top 10 economies of the world, for example. So from the very beginning, the entrepreneur is sort of devoted to international expansion, because if you want to scale the business, you need to go outside, and maybe that's the driver for the entrepreneurship. But it's also combined with the availability of experienced management teams. I think this is something rare in small countries, but you have the brain power available here locally. And but having said that, I think there is a big challenge, and the big challenge is that you are not competing, as Lithuanian, you are not competing with Latvian or Pole on the other side of the border, but you are competing with Germany, with France, with Spain for the location of these businesses, and this is the threat, but at the same time the opportunity for the company. And Central Europe as a whole has demonstrated over the last 10 years that it was very good in moving the manufacturing and this investments in the new developments into to our region. We've seen it over several sectors where the French or Dutch companies were moving their facilities to Poland and other countries in the region, not because of the what many people say low salary and environment and sort of cost benefits, but because of the production excellence and general innovation environment. And as a result, our countries in the region have become serious exporters to the biggest companies. Not many people know that, for example, Poland is larger exporter to Germany than France is. So and is second largest behind China. So it's even bigger than Russia, given the oil and the gas that is being exported to Germany. So these are facts, and I think all the countries in our regions are benefiting from that. But at the same time, it is a threat, because it's not given forever, and at some point of time, the trend can be reversed.
So Juozas, if you don't have more questions, maybe just the last one for Piotr. So I'm still hopeful that you will be investing heavily in the Baltic region, and in particular in Lithuania. Can you confirm that to this wide audience that we have here?
Well, Deeper, for those who know us for many years, Deeper is not the first investment in the Baltics for us. And we've made both platform investments in the past, but we also made several add-on acquisitions to our existing portfolio companies. So for us, this is the core market. And we are quite active player here. obviously, we are not the early stage investors, so there are not that many targets available for us to do the deal, you know, every year here. But we are closely following up the trends and looking for the opportunities. And you know, maybe last summary for that, you know, I was first time in Vilnius. I keep saying this at every panel in the Baltics. I say to him, but I have to do it. So sorry for that. My very first time in Vilnius was as a teenager. I was here by accident during the last official celebration of October Revolution in November 1990, and this was 31 years ago. And I'm active here as in business for many years, and I see a tremendous route that all these three countries have done, and I think this is something that you should be proud of. And as I said earlier, you know, this is probably the best part of Central Europe from the sort of business-friendly environment perspective. And the only recommendation I would have would be not to screw that.
Thank you very much, and we'll be hopeful. So I'm turning to the last but not least panelist today, and I may say right away that there may be some synergies between Arvydas from Practica Capital and the resource partners, because Practica Capital is investing into early stage, and obviously at some point they will be divesting, so there's a resource partners opportunity. So Arvydas, you're partner of Practica Capital, the venture capital, the early stage venture capital fund, which is probably now the largest by the number of investments in the Baltics. And you have invested heavily into the tech sector, into IT. You have one prominent exit in that sector, nanoavionics so far. More and more successful ones are still to come, but obviously you can be regarded as a successful investment fund into a very specific area. So can you tell us more about your experience in the innovative technology sector in Lithuania and beyond?
Okay, thank you so much for the opportunity, and it was a great talk so far. I enjoyed really a lot of good points that I concur, and I think it's the right way to look in the Baltics. So about innovation, right? I think it was intrinsic build up for the Baltic states to produce these outcomes, because right now, if you look in Lithuania, our startups officially, right, that raised money are valued at 7 billion euro. In 2010, it was nothing. It was no startups whatsoever, right? Or at least what we consider today. So we can see that innovation kind of is here, and it's there for many reasons that was already discussed, right? But also I would add to this, it's like intrinsic export-driven mentality, because there are no internal demand in our markets, and there are no opportunity cost to, let's say, work at Siemens for engineer for €1 million, right, salary. So to start a business here is very low risk, and you have to straight think outside of the box, outside our countries, because it's just so small. And as long as you look outside, and this is European Union advantage, right? A lot of countries with different languages. So you start looking at English markets straight, right? And you attack very global, very strong markets. And this builds this robust kind of approach to test your assumptions in the most critical, most kind of competition-driven heavy markets. That is a success of let's say, Lithuanian and Baltic ecosystem. We are at different stages because of different historical reasons, right? But I believe this is amazing what we have here, and you know, innovation kind of is happening every day, and I think I perfectly agree that, let's say, technology is not the goal itself, right? Or the same as goes for artificial intelligence. Every startup now is AI. But AI is a tool. It's actually a concept that is maybe will reach a singularity point, and it will be AI, right? Right now, it's deep learning algorithms, basically, that are aimed at productivity, increasing productivity. So this innovation, if you think about it, right, a lot of young people here are looking at ways to hack and create some business models around making something much better. And this has been an amazing journey so far. Our portfolio companies were mentioned in Juozas report, right? It's crazy how this year brought a lot of success, 20+ million Series A raised at crazy valuations, just celebrating the success that was kind of building up for the last 5 years. And I think there are many that were not mentioned and many more to come. And the next 5 years is going to be awesome. We're going to boost this 7 billion figure to 20, 30 billion, and we're just going to win. This is at least my take.
For me, Arvydas, just to ask you a bit more about those curious investments. I would call them curious because indeed, Baltic tech ecosystem is focused mostly on fintech and IT-based app tools, etc. In that area. Still, I've looked at the top 25 Estonian startups, for instance. There is a resource for that, and still it's dominated by the IT solutions, so to say. Still, there is an area of innovation which is closer to the engineering field, where there's some engineering involved. And you are one of the funds who are looking at those targets. Can you mention some subsectors that you feel or you have looked at as promising, interesting in Lithuania? So you have these satellites, a very curious thing in Lithuania and a very successful exit. Which other areas in that engineering, scientific innovation field you could mention from your experience?
Thank you. It's a good question. And to kind of zoom out a bit, right? So Lithuania or Baltics are not different than global trends. Most of the startups are SaaS and marketplaces. It's just because it's to build a deep tech startup or based on deep IP, probably developed in universities or other, let's say, research centers, right? You have to have validation coming from the industry first. It's not like you can just pull it on top of consumers and test it with 100,000 euro MVP and see how it goes, right? It's a very different model. So it's natural that venture capital provides incremental financing, and we do not possess money like private equity firms investing kind of in this game of 1 to n rather than we investing 0 to 1, right? So we have to test assumptions pretty fast in pretty crowded marketplaces with markets with a lot of competition and established players. Every startup comes in a market where it's existing without the solution, right? So you have to somehow build the demand for it. So I think it's very representative of global trends, what we have here. Naturally, SaaS marketplaces and other fintechs are kind of dominating. I would not agree that fintechs are dominating. I think it's not the case. I think we have SaaS marketplaces completely crushing it, right? Mobility services and whatnot. It's just we somehow have a lot of positive legislation in Lithuania. That's why the trend, but it's not what data suggests, right? And we are super happy to back these, let's say, business models that are being tested on top of scalable technologies, and internet or IT is the most scalable thing by nature of things, right? However, yes, we do have invested in nanoavionics, Oxipit, Softneta, biometric designs, droplet genomics, among others that do they base their product value on top of deep research or on top of proprietary intellectual property, in some cases spinned off or co-developed with universities, right? And this is many points touching hardware. Touching hardware, touching services that needs a lot of certification, patenting, freedom to operate analysis, and so on, right? It's very different life cycle of a company's journey. And you have to be much more patient and deploy much more capital. And validation actually is very hard to achieve. So compared to high velocity kind of low touch points business models in internet or SaaS marketplaces, you call this internet tech, right? Or tech in general, software driven, it's faster, it's more understandable, it's more rapid. You can see when you're failing much faster. Iterative process is just faster, right? And yes, we had successes. We are one of the few VCs actually in the Baltics kind of having this exposure to deep tech. I believe it's different, but also there's definitely potential. But potential probably coming in, we have to make a distinction here, like because we touched this discussion point, right, about our talent pool. So in Lithuania and Baltics, our universities are not top notch. It's good for skill-based kind of labor where you can develop a skill, and this is very important. However, when you need to build IP-heavy startup, you have to compete on global level for innovation, right? And then it becomes like a real challenge. Can we produce this innovation? Because right now, I think our top leaders in, let's say, genomics are still like, 50 plus, 60 plus years old. Very, very talented people that are building like ecosystem behind them or around them. But you have to understand that top IP, top kind of research is happening in very well-funded universities and research centers somewhere. And we have to look at our Lithuanians that are there. They're studying there in those or working there, and they're coming back with great ideas. So this is at least what we've been looking for. By no means competition is local. I completely agree with this. So you have to look at these, let's say, whoever is looking 5 years ahead in terms of what's happening, whoever has the access to the most novel technologies, and whoever can develop this, because European Union provides a lot of this research, that kind of funding and grants that makes us very comfortable investing, because we are not the only ones kind of fueling this path to commercialization.
If I may ask one more question, Arvydas, your first fund will be entering the exit stage or has entered already. And we know that all these larger investments or larger businesses that grew up from startups are not so easy to be divested in a smaller market. Well, capital markets are pretty much non-existent, so IPOs are really very shallow here, and to attract larger funds is also a bit of a challenge. It's changing lately. We see quite some interest and actual investments. But how do you see the exit potential from also your investments, but beyond that as well?
Yeah, so great question. I think we have this joke like why so many top founders are flying with private jets, because they did not sell too early. This is probably the approach, right? That you have to believe in the intrinsic value of the company, and when we as a fund have limited time frame or limited like existence, right? It's 10 years typically, +1. It's not, you're not necessarily going to catch this top inflation, tipping point for any of your company. So you suffer through this valley of death. You incur this, right? You build this 0 to 1. You fuel this. You have your equity stake, and then you need to exit. And if everything is good and working with the company, you typically exit a trade sale in the next round. This is the most common path because I do not believe we have many cases where we would fully exit the company, or we did not have yet. Yes, deeper is actually proving quite the opposite, but I think it's not yet enough so many. So our typical exit path would be trade sale to, let's say, with a secondary route in the next fundraisings when there's sufficient demand. So, the same rules applies as in any M&A transactions and so on. It's just like if there's demand for this type of equity stake in that company, you're going to exit, but you probably very hardly can exit alone in a side process, like tendered process outside. No, it's going to be built from demand in the company fundraising, or it's going to be built like in an overall like big funds acquiring secondary, or there are a lot of secondary funds actually emerging that exactly are aimed to provide liquidity for ESOP holders and for these early investors that wants to exit. So there's a whole ecosystem around, and I think Baltics mature to this point that we will see these happenings more and more and more. Pity that it won't be disclosed like the amounts so that we could put it in statistics and show how great it is, but it will happen in the next 5 years.
Thank you very much. Juozas, over to you then.
Yeah, so I have a broader question. Perhaps first I would like to ask Henri that question. It's not directly related to M&A, but indirectly perhaps. So there are talks about a certain impact of issues with supply of materials and parts from China and other Eastern and Asian countries to Europe for further use in manufacturing businesses and various technology companies. In view of your very wide geography of investments, do you expect any positive outcome from that to innovate for innovation in Europe for the technology sector? Is it so that there will be more impetus now to create innovative things in Europe, not to be reliant on China and Asia, or is it just talk?
No, I don't think it's just talk. I mean, I think that if we take the specifics of semiconductors, as is today one of the main issue in terms of supply, that is basically blocking all the automotive industry, and even going and buying a dishwasher becomes a problem. So what we see here is that, if we look at what 20 years ago about Europe was producing about 44% of the semiconductors worldwide, almost like 50, half of the production of semiconductors. And a lot of technology was actually developed in Europe with companies like ST Microelectronics and Infineon in Germany. And I think that with the trend of outsourcing, people understood that basically, they can just like press a button and get the chip from Taiwan or mainly from Taiwan today, where basically where there's the largest concentration. And with the geopolitical tension and the demand that is basically exploding, and the inability basically to meet this demand, I think people in Europe are seriously, and also in the US, by the way, are seriously thinking about putting new plants at work and continuing to invest significantly in the technology. So it's not only about plants, it's about technology development and making sure that in those strategic areas, things are back in Europe and investments are made in I would say almost like strategic areas. So I expect, yes, that there will be a big move back. Bosch, by the way, is just like invested in a mega plant for chips, especially for the electric vehicles, and I guess we will see more investment in that of that kind of thing, also both in Europe and in the US.
And Piotr, would you agree with that from your perspective in Poland and neighboring countries? You mentioned Poland is exporting heavily to Germany. Now with this situation with supply chains, will it further increase Poland's capability of produce more innovative things, and probably Baltics as well?
Yeah, I see this as an opportunity rather than threat. And it's affecting not only semiconductor industry, but many industries that were so globalized that they were sort of dependent on this Chinese deliveries. So it will only fuel the onshoring rather than offshoring of the processes and the production. So I see this as a clear opportunity for our region.
Thanks. And Šarūnas, from your investment banker's perspective, do you feel any impact of the situation we have just discussed on M&A activity yet, or is this far away in the future? Now the outcome has to be seen first in the economy itself here, and then you will see more deals perhaps because of that, or how do you see that?
Juozas, do you mean the supply chain disruptions, right?
Yeah.
So look, I mean, businesses do not exist in a vacuum. There's always this issue or that to be resolved, and that's how the market deals with it. It's a distributed free market economy. People find ways to either source from near or try to work it out somehow, or in the worst case scenario they decrease the volumes that they produce. But in terms of M&A, of course it's a bad time to sell your business when you have problems, but I think it's widely perceived that first of all, this is not a permanent situation, and since businesses are valued on the basis of all of their future cash flows, you rather look at the strategic value of a particular business to potential buyers and market off of that. But it's better to sell a business with less problems. But I mean, I think that's pretty obvious.
All right. So I think it has been indeed a very interesting and concise discussion that we have had today. So I think Elijus, do you have any additional questions to the panel that we could discuss?
No, I think we are running out of time as well. So let's keep it proper and go back to our daily routine. We still need to finalize some deals before the end of the year.
Or finalize buying Christmas gifts and stuff.
Happy hunting.
Because the supply chains have disrupted, so you need to buy early now.
Thanks to all the participants for finding time during this undoubtedly busy period of the year. And wish you and our audience a safe and relaxing holiday season and a most interesting year ahead. Thank you. Thank you all. And see you soon.
Thank you.
Thank you. Bye-bye.
Bye-bye.